What's up, YouTube? What's up, Discord? Free from it all, everybody. Been a interesting week already. You know, the market hasn't done anything too crazy the last 2 days. But, you know, I spent the weekend, right? We had a Canadian election here, which turned out to be basically a disaster if you live in the West, and exactly what you, for whatever reason, hoped for in the East. I mean, the motto McCartney had was elbows up, but anybody who voted for him, it seems like the motto should have been face down, ass up. That sounds like the Carney motto and the Liberal government motto, because I guess you want 4 more years of a pounding and financial ruin. But anyways, since that was happening, I spent most of the weekend, researching and scrolling and all that other crap, right? And I come across basically a lot of posts pertaining to all these ports, right? People that follow the ports, like, you can follow airplanes online, right? You can follow boats as well, like shipping containers and stuff. So there's like people that follow it, and basically like all of China and Asia is still booming, but then you look at like ports in Seattle and Eastern Canada and Western USA, and they're like dead. And there's like multiple accounts and reports that the shipments aren't coming. And we know that last week China, I guess, like as a joke, or I don't know why, like sent a whole ship of empty containers to the USA, like 200,000 containers or something. Literally insane. Like, that would have cost millions of dollars to send empty containers, because it's heavy, and the fuel and all the shipping and logistics. Like, it wouldn't have been cheap. And store shelves are already beginning to go down. You had the big power outages out east. It's causing some fear with some people. I think there's like, some panic buying from randos. It seems like shit is coming to a head real quick, real fast. Carney's going to be a disaster for Canada-US relations. So it's just going to go from bad, from worse for us. And apparently we're your second largest trade partner. I guess Mexico supplanted us some time ago. We always thought we were your largest trading partner, but I guess we're your second largest. But I mean, to go from that to even worse, like, I don't know how that's going to be good for markets or anything of that nature. You're getting 40% of the companies on the market reporting this week. 40%. It's this insane amount. I've seen big weeks, but this just feels egregiously large. There's Mag 7 reporting in there. We already had Google report and some others, and I think they're just trying to get it out of the way, because it's going to be a storm coming, and a lot of them are guiding negatively. You even had like Royal Caribbean guide, like they guided up. Like, I don't even believe that whatsoever. I don't think the first thing on people's minds is I'm going to go book a cruise. Everything's hunky-dory and dandy right now. Like, I just think that's total bullshit. I mean, we'll see. The people might have to sell their house and live on a cruise ship, but because they can't afford the property tax and all the taxes. But I don't know about taking one for fun, because I saw accounts where they were showing Vegas is dead. Vegas is basically dead. No one's there. The cost of everything, it used to be like where you would go for cheap everything, and now it's like everywhere else that you would go for a vacation, it's all expensive, but with 1/10 of the appeal. Like, I've never seen the appeal of Vegas. I'm sorry, I don't understand it. And everyone's like, what? You're great. I'm not crazy. Like, what is the appeal? I love to go to the mountains and go on nature hikes, and I fly. Like, I'm learning to fly and stuff. Like, I don't see any appeal in going to some desert full of gamblers and like sitting in a pool with everyone's drinking alcohol, and you're just sitting in a pool where people are like urinating in it. Like, everything about Vegas is disgusting to me. I know that off the main strip there's tons of drugs and homelessness. Like, it's a facade. It's literally an oasis. What do you call that? A mirage. It's literally a mirage. Like, It's you think that it's this grand oasis, and in reality, I don't think it is. And it's like, well, if travel is dying, relations between America and Canada are failing, global tensions, I wouldn't say global tensions are escalating, but they're not de-escalating. There's still a lot of stuff going on in Ukraine and Russia. We're just not in the... Nothing about the environment of society or globally right now, to me, is screaming, pump the stock market. It's signaling to me further downtrend. And I mean, I posted, so 3 earnings today, or 2 anyway. Sbux, it's to come down further. I posted about that in the Discord. First Solar, right? It went down 11 or 12% today in the after hours from earnings. Like, there's what am I trying to get at here? Like, it almost seems like every sector is being affected and none of them are positive. I don't know. I couldn't tell you one sector that to me is positive or bullish, including tech. How tech has sustained the market capitalization that it has is baffling, utterly baffling. But let's circle back to First Solar. So 3 months ago in the Discord, and why you would want to be in the Discord, is 3 months, not even 3 months ago, basically, Trump said, like, we're canceling a lot of these solar initiatives and wind. I posted it. I said puts on First Solar and Enphase and basically most solar. And lo and behold, the very first earnings report from that announcement, it tanked the stock. Tomorrow, anybody that played it, you're going to do very well. I highlighted it in my Discord. I spoke about it in my Discord. I said the 3 ones, the main 3 I'm paying attention to: Norwegian, Visa, Sbux, and then I also mentioned Enphase and one other, Western Digital, I think. So I mentioned 5 that were really, in the forefront of my mind. And if you're over the 200 EMA right now, you got to be worried, because I don't see how you aren't falling, how that stock is not falling. If you own a stock and it's over 200 EMA, sell that stock. Not financial advice. Park that cash. Sit on that money or put it into something else that could actually experience some growth, because I think we have pain coming, more pain coming. The tariff situation isn't going away in all of Trump's presidency. It's here to stay. It is not going anywhere, guys. It's not going to get resolved in 3 weeks or 1 month. It's not going to get resolved in probably 2-3 years. I don't think that happens. It's going to happen at all. You got to be kind of correct. The damage is done. The damage is done, and it won't be undone. And it certainly won't be undone easy. And any manufacturing that comes back to the States, I've said it many times in my Discord, it's going to be automated. There's not going to be people working in those factories. It's going to be factories that don't even need lights. They're only going to need lights when a mechanic is in there or an electrician is in there. Other than that, it's not even going to need lights. And it's going to be 24/7. And whatever it's making, you damn sure that the price of that for Americans and Canadians and anyone else, it's going to be 3 or 4 times as much as it was, because of the cost that it's going to require for them to build the manufacturing facility in a place where the minimum wage is multiple times higher than elsewhere, which is why companies were able to profit excessively for so long. There's been companies that have stated, like, we're going to pass the buck on to consumers. Stellantis, I believe GM, Nike, I think even said that. They're all looking to India. India's been the big move destination. I don't see how that helps America, and I don't see how that helps anyone. The Indian port is nowhere near like China, California. They just ship it. India is in the other side of the globe. sure, you can keep the cost of production down, but now the logistics of shipping it, and to my knowledge, they don't have the shipping capacity of China. Like, China dominates global exports. It's like, it's not even close. They have shipping yards that are bigger than cities, guys. Like, it's insane. I really would urge a lot of people out there who think China bad, Russia bad, or just don't know much about China in general, start getting on TikTok, getting on X, getting on the internet in general, and looking at, I mean, it's mind-blowing. Canada, compared to China, it's like third world. Same with America. Everything about it. It's insane. Other than the natural beauty, what I'm talking about, like economy, jobs, infrastructure, the infrastructure there is insane. It's insane. And the efficiency that they perform at, it's unmatched. It's unparalleled. You know, I don't know if the safety is probably horrendous, and the quality, you know, I've seen some of their ghost cities, and the quality is piss poor. But there's also mega projects of theirs that are world renowned. Cities, world renowned. Buildings, bridges, Three Gorges Dam, world renowned. They said that thing, it's a dam, it's the largest dam in the whole world, is missile proof. I don't even know how that's possible. I didn't know anything was missile proof. I thought that was what missiles were designed for. Precision striking a target. You know, an atom bomb would take out a large area. A missile is a precision strike. It's apparently missile proof. I don't know anybody that's going to test that out. You'd be crazy. That would be suicide. But, you know, that's what they say. You know, and to hold back that much water, I'm guessing it probably is. It's, you know, it's pretty insane. So, tomorrow, if you're in the Discord, or if you're watching this, join the Discord so you can be in the Discord. Link will be below. It always is, pinned in the comments and in the description. We're going to be looking for value on some of these earnings plays that you may have missed. You know, in particular, First Solar, which, again, I still think there could be mega downside, but I'm going to be targeting Friday puts, selling to open, another 15% below whatever tomorrow is. I'm hoping that the implied volatility is still there and the value is still there, and that's going to let me capitalize on selling puts. I don't want to sell calls in case there's a rebound or something, because I don't want to be chasing the stock as it moves higher. I'd rather chase lower or something than chase higher. I don't want to chase a single stock higher at this point. Not going to happen. But we're going to be looking at that. We're going to be looking at Starbucks. We're going to be paying attention to all the earnings that have happened tonight and that will be happening in the morning. Caterpillar. There we go. And that was the other one that I was, you know, that's going to be probably a big one that's going to be affected heavily by all of this noise. We're going to see. We're going to hear from them. Mentioned it in my video last week. There's a lot of railroads reporting this week. They're going to set the tone for the reality of the situation, guys. If they are saying it's bad, it's going to be worse than what they say. They're going to be like as muted or toned down as legally possible without defrauding their shareholders. So they're going to keep, you know, oh, I have a favor to ask, and it's like the biggest favor in the world. Like, they're going to mute as much as possible how bad it really is. But if they're directly, what am I trying to say here? Like, shipping and the shipping containers are directly affected by rail containers and rail traffic. There we go. Rail traffic is directly affected by shipping traffic. So if they're saying things are bad, you know that the shipping is bad, or even worse than they're saying, which is going to translate to consumer sales, massive drops across the board, pressure on the markets, pressure on the news, which will affect the markets. The news will be affected, and then that's going to translate to the markets. Markets run on fear. They run on fear, and then they run on hubris. To just extremes on either side. They don't actually run on technicals. If they ran on technicals, half of these companies would be dollar bin stocks. Apple, Uber. Uber's never had a profitable year or quarter, ever. The whole premise of the company is to become one day a robo-taxi company with no employees, and the only overhead is mechanical. That's it. Have the app in place, have the infrastructure in place, have the consumers in place, like the clients that are familiar with your product, use your product, reliant on your product, 15-minute cities and shit like that. Have all that in place. No drivers, no other expenses. Fuel or electrical if they go EV. Never made money. It's an expensive stock. It's not a 30-cent stock. It's not a penny stock. It's expensive. Why? It's never made money. It doesn't make sense. Nothing on the stock market runs on that shit. So we're going to be, again, paying attention to that. Look for alerts in the Discord. And my Discord is probably your best bet on being able to navigate the weeds, guys. Like that PayPal alert that I gave out all last week, I put the video on YouTube. That was a free video. I don't do it so much anymore. I used to do 3 videos a day. I said all the time, I used to do 3 videos a day. It's all in the Discord now, guys. But I put the video out on PayPal. You were able to act. Yesterday, you were able to close for 25 to 45% gains from Friday. And today you were able to close for 98 and 99% gains. The maximum gain was 100%. So you could have closed every position. I provided it all in the video. I gave you the exact numbers, provided it in the Discord, showed screenshots, all the shit, did the charting. 98, 99%. You could have doubled your account if that's what you were, if that's the kind of money you put in there. Or doubled your position size. 3 days, guys. My Discord pays for itself. Fucking my free YouTube pays for itself. It was free info. Have some faith in your boy, guys, because I've been doing this in a public setting for over 3 years now. Okay? But I've been doing this since I was 22, when I had my first job that gave me stock options. And that's what kind of got me interested in it, okay? But, it is what it is. We'll see where this week takes us. We still have some Mag 7 reporting, and then we have those railways. And then Friday, I think, what do we have? I feel like we had something on Friday. I can't remember off the top of my head, but... and then this is just the start, too, of earnings. We're going to have a whole month of this. All of May is going to be very active. So you want to be in an environment like mine, which isn't bots. There's no bots. There's no trade. There's no bots. There's no spam. There's no... if you say something short something or you're negative on something, you don't get called a clown or this or that or the other. Many people respect the downside mentality. If you're bullish, by all means, be bullish. Like I'm just referring to like a stock twits environment where it's very... herd mentality. A lot of people only go higher. Any stock that falls, everybody's making fun of the people that own it and shit. We're here. We're designed to try and help you grow your accounts, reduce how much you lose, practice safe trading, things like that. So, account growth. By all means, get premium. You can reach out to me through DM anytime you want. I'm available 7 days a week to my premium members. So, and then, I'm active 7 days a week in the Discord too, but that's your more immediate path to me. Starbucks, nice drop today, guys. Looking forward to hopefully that adding some IV to the Starbucks. Like real quick. So like an example of what I'm looking at tomorrow, right? Starbucks fell to, I believe, 78. or 80. It felt like $6. That's like almost exactly what I was hoping for, because that's going to put it in line with that's pretty good. That's going to put it in line like with levels, price levels from around pre-COVID, which is my favorite thing to look at. Pre-COVID price levels, guys. The last 5 years have been a shitstorm of bullshit and fraud and manipulation market-wide. Not just on GameStop, not just on AMC, on the whole market, okay? And it's all starting to unravel. So we look to those pre-COVID levels. Starbucks is heading there. I think it was something like 66 or something, which would leave a lot of room for downside, but they do have that new CEO, and every time I go, it's still quite busy. I don't think they're really experiencing much pain there. What will be interesting is, is most of their coffee imported? Yes, it is. Are these cups imported? I looked up to see if the cup was imported. Guess what? The paper is imported. They're milled or whatever in like Milwaukee, or I don't know, somewhere in this. There's milled in the States, but the paper is probably Canadian, if I had to guess. The lids, I don't know. Milk products, it's probably American. I don't believe they need to import that. But so their whole business is subject to these tariffs. That is bad. That is not good. The coffee is subject to tariffs, and the cup that holds them is subject to tariffs. So there could be more downside, which I think should add value to these puts. Now, so you would go, well, if you think it's going to go down, Kev, you don't sell a put, dummy. You sell a call. Again, I don't want to get caught chasing a stock higher. I'd rather capitalize on a nice 6% overnight move, because that's going to really increase the value of the lower puts. It's going to increase the value on them. Capitalize on that. If it falls further, I'm either gonna get exercised and own Starbucks at a discount from previous levels, from recent levels, not from all-time lows or pre-COVID lows, but from recent levels, which I can turn around and sell at a loss or sell covered calls on to see if that holds. Like if it finds a new support, holds and bounces higher, it's still the brand, okay? There's value in the brand. It's a world-renowned brand. It's valuable. It's not, I don't foresee the brand going anywhere because of tariffs. You see, they're going to have to weather a storm. And there's a big thing about Starbucks that is amazing. It's very scammy, okay? But it is amazing for shareholders, is their gift cards. They had like $1 billion of gift cards in 2024 that they just expired. So they had like $1 billion of free money put into their cash on hand, right? Like GameStop has like $6 billion cash on hand from diluting shareholders. Starbucks has $1 billion of their cash on hand is simply from just people buying gift cards and not using them or losing them. But aside from the gift card side of them, they what do you call it? Like me, like my app is, I constantly have $25 or more on the app. Like anytime I go below, it preloads that amount. It debits me $25. So I just go above the preset bottom, and they have millions of people that are like that. Like they have an account with Starbucks that just doesn't get depleted because you keep funding it so that you can pay with the scanner, for your convenience. They're one of the biggest banks. They're one of the biggest banks in America that aren't a bank. It's like completely unknown to the average coffee drinker who's just a customer of Starbucks. And it's, I would say, 50-50 understood by people who are in the stocks. Maybe 2 out of 10 are aware of that. And anyone who's looked at Starbucks stock, it should be 1 out of 1, but it's maybe only one out of, 1 out of every 2 people understand that fact. Like, if you're investing in Starbucks or playing Starbucks, you should understand the pros and cons and the ins and outs sort of kind of their business. Like I mentioned, cups, tariffs, coffee beans, imports, lids, paper. I don't see this, and I'm just thinking about coffee. I'm thinking about the fucking spend account. You know, the campaigning for, you know, they pulled back on DEI. That's a positive, right? DEI's been killing companies. They pulled back on that. They didn't walk away from it. They just pulled back from it, you know? But that having access to that capital for free is insane. I have no idea how much money they have from these sort of funded accounts. I'd have to look into the filings or something. It's not really something I care to do or need to do, because I'm kind of ballparking. You know, if I have $25 and the minimum is $25, and they have, I don't know, 10 million people that have $25 at all times in their account, well, do the math, right? That's $250 million available to them at all times, right? So if they have 40, that's $1 billion. 250 times 400, $1 billion, right? So, and it only goes up, you know, maybe they have 50 million Americans that have that. I don't fucking know how affluent Americans are or how many are avid Starbucks users, but it's a decent chunk of cash that just never goes away, that they can access at any time and use if they want to open a store or open 10 stores or 4 stores to upgrade their looks, like the ones where I live just had to do. The franchisees or whatever they want to do, you know, they can access that capital. That's a positive. So what does this have to do with selling puts? That limits the downside risk on the puts. It took me 5 minutes to explain why I would prefer to do the puts than the calls, right? But that's what it takes. It takes 5 minutes to explain this kind of stuff on a video, and even longer in the Discord with pictures and charts and things, because these are concepts that need to be understood before you take a risk-based position. The whole market is risk-based positions. Even just buying a stock, holding it, and praying it goes up is risk-based. The risk will go down. And any of things affecting the individual company or the business sector would affect that company. So, you know, food is always, and this kind of stuff is always a go-to for people. Broke people will get a Starbucks before they get a big screen TV or something, or a trip, right? This is their splurge. It's something little. They've had a bad day, or they've had an okay day, but they're tired, or they just feel like they want to give themselves a treat. They'll go spend that. So it's a very, even though everything's imported, to me, it's still a business that can thrive in downtrends, or at least survive, okay? And then come out of it stronger. I mean, it didn't go away during COVID, and, you know, people were wearing masks in crowded Starbucks. Is like, okay, whatever. Rather than not going and exposing yourself to all these people, they still went, you know, deadliest virus on the planet. Oh my God, put on a t-shirt over your face. Fuck hazmat suit. This will protect you. And then they go to filthy public environments. Like, I didn't go to malls, guys, for like 4 years. You know, other people did. And everybody was still going to Starbucks. And it's like, so we can survive market fluctuations and trade wars and shit. Probably, right? So that means all this extra money from the dip yesterday that's being added into the IV tomorrow, that's going to make puts more valuable, but still relatively safe. I mean, I don't like going, like, so whatever the price is tomorrow, let's say it's 80, I'm not going any higher than like probably $72, $73. So 72 would be 10%. $8, another $8 from 80 would be 10%. I always like to go 10 to 15%. I feel like 15% is too far on a Starbucks. It's not going to pay any money. But I don't imagine, if Starbucks fell like 6-7% overnight, I don't imagine Thursday and Friday, it falls another 10. It's possible it does like 5 or 6%, 5 or 6%, 5 or 6%. That is possible, but that means I'm picking up Starbucks at $72 with recent highs like over 100. You know, that's not the end of the world to me, right? I don't want to own any Starbucks. Personally, I don't want to own stock. I would rather just make money selling puts or my scalping day trades and swing trades and things like that. I'd rather do that than own any actual stock at this point. But if I have to get assigned, I get assigned. 15%, you're getting even way more protection. But, you know, again, maybe it pays next to nothing, you know. Each position, $75 times 100 shares, that's going to be $7,500, right? So these positions are not going to be super cheap, so to speak, but and they might only give you like 25 or $50. I'm not saying it's going to be good money. I'm just saying it's going to be basically free, risk-free money. Basically, again, fucking they could come out and say we're bankrupt. It can happen. You don't know. I don't know. It's not going to happen, but I'm just saying, you know, there's always that 1%. So there's, and even with the selling the puts thing, guys, which I like better than the calls at this point, and you can still do it with the calls. Again, I just don't want to chase up if it goes against me. So if the puts goes against you, you can so for example, you could sell a 72 put, sell it. So someone is paying you for that opportunity. You sell it to them, and then you can buy a 71 or a 70. So as the stock, if the stock falls, which I do think it'll probably fall, I don't think today, overnight, I don't think that's going to be the end of the bleeding. I think that will probably 75. If it's at 80, you know, you'll have to see the psychological levels. I'm going to do the charting on the Discord, so you'll have to join Discord if you want to see my charts. Fucking, it is what it is. We'll find those levels, but like as it falls, if it does, which I think it should, because obviously they guided down, the market didn't like what they heard, those puts will go up in value. And now you're you know, as it comes closer to your strike, so 72, that's a strike. As it comes closer to that, if you have the 71, right, your 71 is increasingly more valuable. You're really only on the hook for the spread between 71 and 72. You're just on the hook for that spread. You'll never, like if the stock fell to 65, you're getting screwed on your 72 for $7 a share, but your 71, in theory, and it won't be that lucrative, but in theory, it would be $6 a share. So you'd be on the hook for a $1 difference. But you sold the 72 for money. You didn't sell the 72 for zero. Maybe you sell the 72, maybe it's 50 cents a share. So $50. So you're really only on the hook for 50 cents a share, $50. You'd be on the hook for $50. So the downside, the risk, the risk limitations are low as well. Now it costs money to buy the 71. It's not free. So that's going to come out of the money you made on the 72. So now I guess your total, and the 70 might have been 25 cents or 30 cents. It might have been half of the profit you made, half of the profit you're making. Think of it as insurance, guys. That's, you know, it took me 9 minutes to explain to you insurance. It's insurance on the play. You're limiting the amount of money you can make by selling the put. You know, buying a put, you're not limiting. It could go as low. The stock could get delisted, and you make 100. You know, all the money all the way down. Limited only by the strike price. So you'd make 72 all the way to zero. You make 72 a share. Selling it, you're limited by the premium that you made selling it. Okay, and then buying it cuts into that premium because it's a cost. You could target 70 to lower that, like the Weeble one I posted in my Discord. holy shit, is that pile of crap falling like a rock. Like, it's insane. I sold them at like 16. It's like 14 now. I sold them for 91 cents. They're like $1.35 now. So I sold one more. So now my average is like $1.10 or something. But like, Jesus, I sold 12.50s and this thing's falling so much. Like, it was $80 11 days ago and now it's 14. So yeah, that's what I'm talking about. It can happen to any stock. But what I did was I also bought 4 times as many puts. Twice as many puts. So if I sold one put, I bought 2 at 7. I bought one at 7.50 and one at 10. So if it falls rapidly all the way to 10, I'll be fine. If it gets delisted because it's a Chinese ticker, it literally just got listed, so why would it get delisted? But I want to hedge. I don't want to, I want to insure myself against that coming up. If that happens, I'm going to be ecstatic because I bought 2 puts for every one that I sold. So I'll be doubling up. It'll be all good. And they were so cheap compared to the 12.50 because obviously 10 is $2. 10 is a 25% difference from 12.50. But in all actuality, if it's going to fall to 12.50, it could fall to 10. And it's obviously shitco. Webull trading is nowhere. People don't look at it like Robinhood, I guess. They look at it as a shitco because it's friggin' $14. I mean, it looks like a buying opportunity to me, frankly. But I don't want to own any stock. Like I said, I'd rather just sell the puts. So anyways, they didn't have any strike between 10 and 12.50. Since this is going rapidly lower, I am positive they're going to be introducing 50-cent strikes. So it'll be 10, 10.50, 11, 11.50, 12, 12.50, 13, 13.50. It's going to be 50 cents. At that point, I'm probably going to be able to close my 12.50s for no profit or for some profit. I would imagine, because it's going to mess with the IV of the whole chain. Or I just hold it and like don't care. Like, I don't really mind picking it up at $12.50 a share. I will roll that into covered calls. It was $80. I have no problem getting an $80 stock for 11 that isn't, to my knowledge, having financial problems for $12.50. Like, that is in one scenario where I'm like, okay, sounds good. That'd be like getting Disney, which was $80 for $12.50. Who wouldn't want that? Like, I'll take that. It'd be like getting Starbucks, which is $80 right now, for $12.50. Deal, right? So yeah, I don't know. That's the kind of stuff I'm talking about, though. You can straight up just sell puts, absorb all the risk. A lot of the times you can leverage because, like PayPal, for example, that was 30%. I mentioned it in the video. So for every $1,000 you sold puts on, you really had access to sell $3,000. Or you can get the insurance. You can get a strike or 2 strikes lower. You got to keep it pretty close, otherwise it's pointless. You're just throwing money away. So the next strike would be ideal. It's going to cut a significant amount of your gain out. But it's going to completely save your downside risk. Your downside risk is super protected if you just go 1 strike. It's the same with calls, but again, you're on the hook for the physical shares on a call. Where with a put, you'll get assigned shares. You're not necessarily on the hook. You'll just get assigned shares. It's a totally different. And then like margin call wise, they're probably coming after you if it's running up. Versus if it's going down, they're not so much coming after you on a margin call. It depends what your account position is, because you should only be able to sell enough puts on what your account can afford to buy. Whereas with calls, you can have unlimited losses. If AMC goes from 2 to 87 and you sold a call at $4, which was 100% upside, you got destroyed. You got destroyed. It went from 2 to 13, and you sold at 4. You're on the hook for shares at 4. It's already 13. You're down hundreds of percent, 300%, 350%. It goes to 72. you're done. You're bankrupt, right? So even that is why I like the puts better than the calls. There's limited downside risk. You know the money you're making right away, and they can't run the way that a stock can run. Like the company would have to go bankrupt or bust, or have an insane dilution, or some massive thing would have to happen, right? It would cause a 40 or 50 or 70% crash. It's just, and again, if this isn't, we're not talking pharma stocks. Pick your sector. You play pharma, that can happen to you. Every pharma stock can just get cut in half overnight. It happens every single day. Okay? You play Starbucks or Boeing, PayPal, all these companies that I've been talking about on YouTube and in my Discord, none of them would fall into that sort of pitfall scenario. It's just not going to happen. So anyways, I hope you enjoyed my 41-minute video. This is for you guys. This is all free. You know, if you left in the first 5 minutes, fuck, sucks to be you, because I guarantee you some of the information I gave, and especially on the Starbucks, is going to be profitable. You will make money on that. So we will check back with you guys tomorrow. We'll see you in the Discord free.